Good morning, everyone, and welcome to our webinar, Redefining Success. It's actually our last webinar for 2021, which is a bit scary, but we hope you do get lots of value from our session today. Just a bit of housekeeping before we get started, although I'm sure most of you know how Zoom works by now. You can select audio settings to select and test your speakers. You can submit any questions you've got throughout the webinar using this Q&A button, and we'll answer as many questions as we can at the end of the webinar. If you do need to leave the webinar at any time, just click the Leave Meeting button and you can rejoin the webinar by using the same link that you used to get here. Once the webinar has finished, there will be a short survey that will pop up on your screen. If you could just spend a couple of minutes completing that for us. We read every piece of feedback that we get and take it on board to improve our webinars going forward. There will also be some great free resources that we are giving away from the webinar today, which we'll mention towards the end of the webinar. So if you are interested in receiving any of those resources, all you have to do is tick the boxes on the feedback form and we will email them out to you. First of all, I just want to explain a little bit about Roslin Associates. Our purpose is to help our clients build a better business and help them make more money, save time, and live a better life. And we do this through our business development services and coaching services, combined along with our financial expertise as accountants and tax advisors. So who are we talking to you today? My name is Ikra Aslam and I am one of the client managers here at Roslin Associates, and joining me is Ian McLeish. For those of you who don't know him, he is one of the directors at Roslin Associates, and we'll be changing back and forth between us throughout the webinar. So I want to kick off with a thought of the day. Success is walking from failure to failure with no loss of enthusiasm. With what's been going on recently, we are all experiencing some sort of disruption and uncertainty in our personal lives and in business, and we don't know how long this is going to go on for. We have all had to adapt because of this in one way or another. No doubt, as business owners, you will have learned some things because of some failures, either in your own business, or you may have seen other people's failures on the news or online. Some of the biggest learnings have come from failure. Of course, COVID is not a failure in itself. The issue is that what we've done in the past may no longer feel or be successful to you or to those around you. So we need to respond to that and reconsider what we're doing, as well as look at what success means to you and to your team. So with that in mind, what we're going to have a look at today is what success looks like for you, your business, and your team, and how your planning should reflect this. We'll dive into some strategies to grow your profits and cash flow. We'll look at building a healthy business. Then we'll have a look at how we can help your business with some free tools and additional support options before answering any questions that you might have. So I'm going to pass over to Ian, who is going to get us started.
Right, thanks, Ikra. Excuse me. What this webinar is all about is, to be honest, success. We used to know what success meant, and the question now is, what is it really? So one of the things we say always is your business should be there for you, not the other way around. And this is something we often remind business owners when we're working with them on their business, but what does it really mean? Well, one meaning is that the business is there to get you what you want, and that might change. The business is a vehicle to help you be successful in life. It's not a thing in itself. But often owners of small businesses feel that their business has become a bit of a monster, which is sucking the life out of them, or something they're having to support through long hours, not enough cash, meaning that you have to work longer and longer for less and less. And I believe this is often caused by the business owner lacking a clear idea of what personal success means to them. So what does success mean to them, and what do they need to do to be successful? Now, in this webinar, we're not talking about businesses that have done really well through the pandemic. There are quite a few of those, but there are equally a number of businesses who have done not so well. Some have been totally wiped out, some have had to pare right back. But pre-pandemic, I often found that business owners tended to define success purely in terms of material wealth. Maybe it's because we're accountants, but that's what we found. How much profit can I make? And what will I be able to buy with all that money? That was often the kind of attitude that was there. But the pandemic is shaking us up in a big way for many businesses. Financial success is perhaps not as easy as it was before. Time at home with the family has often led to a reevaluation of what business owners actually want. I've heard many say that having the time with their family has been amazing. They want to make sure they don't go back to the longer hours they used to do, missing out on all that experience with their family, watching them grow up and having fun with them. There's also the fact that external factors such as huge increases in materials, energy and labour costs in many industries has also meant that pre-pandemic levels of profits are even harder to achieve. Often the only reaction to this is to work longer and harder to get the profits, which will one day allow the business owner to back off, and then they will get what they really want. And that might be okay, but will it really get you what you really want? Do you know what you really want? Maybe it's time to find out what you really want your business to deliver to you. And maybe it's time to redefine what success means for you. Then you can develop a plan to make sure that your business is focused on delivering what you want rather than what you thought you did before. Pre-COVID, success might have meant something very different to you. You may have had growth plans which have been disrupted. Given the change that COVID has brought, some have fallen into the trap of just working harder and burning themselves out in the pursuit of this profit, when in reality, there might be other ways to potentially have your cake and eat it too. So for the purposes of this presentation, we're going to refer to an example business. It's a gym called The Rock, which is owned, perhaps not surprisingly, by a fictitious husband and wife, Dwayne and Jane. But the principles will be equally relevant for your business. So in our example, let's say Dwayne and Jane originally wanted to achieve £50,000 profit, but were working long hours to get there. Now they're thinking that more time with the family is more important, and they're wondering if they can achieve this success, as they now define it, with a lower level of profit, say 40,000. And remember what I said before, the business is there to serve you, not the other way around. By redefining what success means to you personally, it's possible to build a plan around how the business delivers that. Defining what success means to you allows you to define what success looks like for your business. But we can't just stop there. We need to think about how do you define success for our team? A happy and engaged team is it's not only good for them, it's great for your business too. So throughout this webinar, we're going to flesh out how to create this new definition of success for you, your business and your team, using Dwayne and Jane's gym as the example. Okay, so let's start with your definition of success. In other words, what is it you want your business to deliver to you personally? We refer to your definition of success in a section of our business plan called What We Want to Achieve. And we usually refer to 4 things. Firstly, your hours of work. Do you really need to work such long hours? Can you spend more time with the family and still get by financially? In our example, Jane would love to have Dwayne at home more to help with the children, for instance. So, also the next is your role in the business. Are there things you do at work that could be done by others to free up your time? In our example, Jane would love it if someone else could do the VAT return, so she can get her evenings back to have to spend time with the family, watch Netflix or whatever else she wants to do. Thirdly, your drawings, the cash you take from your business each week or each month. If you reduce your cash demands on your business will find it easier to survive on lower turnover, or alternatively, you can employ or contract with other people to do some of the tasks you've done yourself. You'll have the money to pay them. Now remember, in our example, where the cash demands may have been 50,000 in the past, maybe we can get back and get that down to about 40,000 for Dwayne and Jane. And finally, your holidays. When you're defining your success, you've got to think about time off from your business. What holidays do you want to take? Where will you go? When will you go and how long for? So just as it is for Dwayne and Jane, your definition might be quite different to what it was pre-COVID. And what do we need to do in order to do that? What do you need to be happy? Maybe we can get by on less cash from the business, and in so doing, take some work pressure off yourself. So the first thing to do in looking at how much cash you can get by on is to do a personal budget. A personal budget helps us understand whether or not you can get by on less cash from the business. And if you can make personal savings, you reduce the cash flow strain on your business. So no doubt over the last 18 months or so, you've made some savings. I know I have, or you've changed your spending priorities. Can you carry on with that? Can you carry on with these savings? I mean, hopefully you haven't increased your spending online too much, especially if your business is under pressure. But we have a complimentary personal budget template you can use to ensure you don't miss any expenses. Simply look at your bank statements online or wherever to see what you typically spend in a month. Go back 3 or 4 months to review your expenses and ensure your budget is realistic. So in our example, Jane and Dwayne have decided that they can make things work on 40,000 instead of 50,000. Dwayne is going to cut down what he spends on supplements. Jane is going to be walking with her friends instead of going out for lunch each week. And also going to have a camping holiday locally to reduce costs. By getting control of your personal budget, knowing what you spend and deciding what you're going to continue spending is hugely empowering. It gives you back control over your money. So that's the first thing. How much money can you manage on from your business? So the next thing is, once we're clear on what success looks like for us as owners of the business, it's time to translate that into business success. Excuse me. If we go back to our example, in the past, Dwayne and Jane wanted the business to deliver £50,000 to them each year. Having done their personal budget, they've identified that they can make things work for their family at 40k. We'll show you shortly what an impact this can have on your minimum viable sales level. Success for the Rock Gym can then be built around achieving a lower level of sales. Alternatively, they could invest those savings into the business on things such as more support in marketing, finance, or administration to free up their time to work fewer hours. Let's look at an example. I'll let Ikra carry on with the next part of this. Thanks.
Thanks, Ian. Okay, let me just share my screen. Okay, so what does minimum viable sales even mean? You may have heard the phrase break-even point. This is when your sales are equal to your costs and therefore you make no profit. Minimum viable sales, on the other hand, is the level of sales that you get that are sufficient, that give you the sufficient profit from your business to meet the drawings that you want to take from your business. Just a quick note that this is a simple example, and there may be other implications that you need to think of when doing an exercise like this. For example, if you've got a loan that needs to be repaid, and also these figures don't take into account any tax. So in our example, previously, Dwayne and Jane's plan was to achieve 50,000 in profit. They know that their overheads are 62,500. So that means that their gross profit needs to be 112,500. If they have a gross profit percentage of 50% in their gym, their annual sales need to be 225,000. Now let's say that they're open for 46 weeks in the year, then their minimum viable sales per week is 5,000. Now let's have a look at the revised plan with a profit of 40,000. If overheads stay the same at 62,500, then they need a gross profit of 102,500 at a 50% gross profit percentage. So the revised annual sales and minimum viable sales are 205,000 for the year and 4,500 per week. And that's a 10% reduction in sales. If they wanted to reinvest 10,000 in support for marketing and finance, which could result in a lift in gross profit percentage by 2% to 52%, Dwayne and Jane can get by on 4,700 per week as a minimum viable sales, as opposed to the original target of 5,000. Once you've worked out your minimum viable sales, you need to set a plan and goals to help you get there. Dwayne and Jane need to think about setting SMART goals versus just normal goals. For example, can you feel the difference between these two goals? I want a successful business versus I want to make 4,700 sales per week with a gross profit percentage of 52% every week. Which goal compels you to act? The second one. Let's break it down and ask yourself the following questions when you're setting goals for your business. The first question is your goal specific? That's the what, the who, the how, the when, and the why. You need to describe exactly what you want to achieve. Is your goal measurable? Set a target for the goal and make sure that you're able to check the progress of that goal. Even keep the measurements visual on a spreadsheet, perhaps. In Dwayne and Jane's example, measuring weekly sales and gross profit percentage on a spreadsheet and perhaps turning that into a graph, they'll be able to easily see if that graph is going up or down week by week. Is your goal achievable? Check that you've got the support, the resources, and the ability to achieve that goal. You need to make sure that the goal is slightly challenging, but not so much that it's impossible and demotivating. Is your goal relevant? You need to make sure that the goal aligns with your business plan and vision. And lastly, is your goal time-bound? Lock in a time frame, a realistic one, to help you achieve that goal. When you've put a deadline to a task, you're more likely to get it done. We can then create specific actions to achieve those goals, remembering that each goal and action needs to fit into this SMART format. This forms the basis of a wider plan, and I'm going to show you how all that flows together. So Dwayne and Jane done a business planning session with their accountant and completed this one-page, two-sided business plan for their gym. They've defined their core purpose, which is all about why their business exists for their customers. And they want the gym to be associated with their vision of peak personal performance. Their definition of personal success is defined in the what we want to achieve section. So as you can see, we've got the 40k profit there. Jane reducing her hours by delegating marketing and finance, and Dwayne also reducing his hours, and together they're going on that family holiday. You can also see here that they've also got their values that their business holds. And they've done their personal budget that Ian mentioned earlier, and they know that they need to achieve the 40,000 profit, which translates into annual sales of 216,500. This is what we calculated earlier on. So that high level budget then gives us the KPIs, also known as key performance indicators, that Dwayne and Jane need to measure on either a daily or weekly basis to make sure that they're staying on track. You can see in this section that they have their minimum viable sales and gross profit percentage, as well as increasing the number of new inquiries per month and the conversion rate of inquiries becoming new members. They also need to monitor their member retention rate and the average amount members are spending. It's important that you have a measurable indicator so you know if you're on track to achieving your vision of success. So you can see that they've got that here on the business plan. Not only do they have the key performance indicators, they've also got the targets that they need to achieve alongside those. Along with the KPIs, they are also linked to the opportunities that the business has, the vulnerabilities, and the most critical challenge. The second page of the business plan is a 90-day action plan which records goals for the year and then breaks those down into 90-day goals and actions. So as you can see here, we've got the minimum viable sales number and the gross profit margin that have been converted into a SMART annual goal. The first 90 days is all about the actions that Dwayne and Jane will take to ensure that they've got a robust system to measure if they are on track to achieving their definition of success. And it's important here that the plan becomes a reality and doesn't just sit at the bottom of a drawer. And that's why we've come up with this just a one-page, two-sided business plan, and not this big 40-page business plans that people think that they need to do a business plan. The other one-year goals all link back to how the business can deliver on Dwayne and Jane's revised definition of success about reducing hours and the level of personal spending. It's important to note here that the changes Dwayne and Jane are making might not have immediate results on cash flow. For example, they're going to spend the first quarter contracting a marketing person and outsourcing their finance responsibilities. So you'll see here that there's a 90-day goal here to reduce debtor days from 32 to 22, which will give them a much needed cash injection within the next 90 days. And Ian will show you shortly the impact that will have on their cash flow.
Thanks, Ikra. Right. So we've talked about the personal definition of success and how to reflect that in your business plan so your business can achieve the level of success you need it to. And at the same time, it's always important to dig down and to look at strategies to grow your profit and improve your cash flow. And we often refer to a traffic-like analogy. So often there are lots of things you need to stop doing, and there are things that you should continue doing, and there are things that you should start doing. For example, a red light activity might be to stop working for customers who don't pay you or don't respect your core values. Or you might want to stop doing your own VAT return as it impacts on your evenings, just as Jane's decided in her example. An amber light activity might be to continue revising your prices to reflect any increases in costs you're experiencing from your suppliers. A green light activity might be to update your personal budget and business plan and start regularly monitoring your results against your plan. So please write this down. What you can say yes to is defined by what you say no to. Remember, your revised definition of success is about you working smarter, not harder. So we're going to look at a couple of examples of how you can have an impact on your profit. And we use what's called the growth equation. Some of you might be familiar with this from one of our earlier webinars, seminars, the 7 ways to grow your business. I'll just move this next slide and show you what this is Dwayne and Jane's initial plan. You'll see at the top they were making 38,000 before, and they decided they wanted to make 50,000. So they're 49,900, close as it needs to be. So starting again, their existing customers on the left-hand side, 600 existing customers. So the first way to grow your business is to improve your retention rate. That is, in the gym, how many people renew their membership? Now, in the past, it was 80%. They want to increase that to 85%, a lift of 5% there, which would mean that they retain 510 customers instead of 480. Then they want to increase the number of leads or inquiries they get. Before it was 70. They decided that with a bit of help from marketing and they should be able to get 120 new leads. Then they had a conversion rate to increase it from 80 to 85%, so that they would actually acquire 102 new customers rather than 56 as in the past. So that gives them a total of 612 customers as opposed to 536 if they can achieve these 3 changes. We've kept it at 1 transaction per year, being once a year they renew, the customer will renew their membership or pay for the membership. But what they can do is encourage customers to spend more, perhaps by encouraging them to buy drinks or food or other things within the gym. So they're looking at ways to do that. But you'll notice at the bottom right, they're actually going to spend £10,000 more. And that's basically on marketing to help their leads, and also working with their accountant in order to measure, plan, and make sure that they actually held accountable to achieve that. Now, that was a plan pre-COVID. And as we said, they've decided that with a new definition of what personal success is, they can manage on 40,000. So this is the revised plan. Now, you'll see that they've faced reality that the retention rate is going to fall because some people just won't want to go to the gym during a COVID pandemic. So they've put it back down to 75%, which they think they can manage. They're still going to spend the money on marketing to get the number of leads, but they also kind of accept that the conversion rate probably won't increase given the circumstances. So they'll end up with only 10 more customers per year than they would have done when they did before. Now, the average transaction value, they've said, well, maybe £25 extra a year is maybe too much. Maybe we'll make it 20. We'll aim to get them to spend, each person to spend on average £20 when they come to the gym over the year. So that's not per visit, obviously. That's just, it's not a huge increase. They've also spent some money, again, with their marketing and accountant, with the marketing to get the leads predominantly, and with their accountant to look at their cost of goods sold to see if they can just chip away a little bit of that so they get a better gross profit percentage at 52%. And you can see at the top again, the old profit was 38 rather, the new profit's 40. So they've managed to get, if they can achieve all these different steps, they've actually managed to achieve the 40,000, which they've now decided they could manage on in the current circumstances. And this doesn't stop them revising that next year when things may hopefully go back to normal. So this is for the next year coming to make sure that they can get enough money coming in from the business to support their lifestyle as redefined. So they also decided we've got to look at ways to improve their cash flow. So ultimately, cash is king, as we've all heard that before, and you want your cash conversion cycle to be as short as possible. If you're not sure what your cash conversion cycle, have a look at one of our earlier webinars that are on our website. I think it's cash flow management webinar, which will explain in more detail what that means. The more cash you have in your business, the stronger, more resilient it will be. So technically, if you increase cash by collecting debtors, your net assets don't actually improve as debtors go down and cash goes up. But of course, you can't pay your bills. You can't draw your debtors out of the business. You have to convert your debtors into cash. So that's where it's so important. And also, the higher your debtors are, the more risk there is of somebody not paying you. So the quicker you can convert your debtors, people who owe you money, into cash, the better. Other things you can do is you can negotiate better terms for payment of suppliers. But you have to be really careful here, because I don't mean just don't pay on time. It's more a case about negotiating with your supplier to get increased terms. Now, a lot of them will be resistant in the current climate, but you never know. If you don't ask, you don't know, you won't get. And as I say, what's important is to come to an agreement with your suppliers. Also look at how long it takes for your stock or work in progress to be invoiced. There's no point doing loads of work if you don't actually invoice it. If you invoice it quicker, you're more likely to get paid quicker and convert it into cash. And you could also consider whether you need to hold so much stock, or if you can possibly issue progress invoices to reduce the number of jobs you have on the go at once. So all these things can help increase the cash in your business. So make sure you're keeping a close eye on how long it's taking for your debtors to pay you. There are so many things you can do to get paid faster, like updating your terms of trade, automated or repeating invoicing, or simply just having a system in place to chase up slow players with a systemized process or a credit manager. So let's look at some examples based on Dwayne and Jane's gym. So at the Rock Gym, debtors are currently 17,500. That's the amount that customers, members of the gym, haven't paid when they should have done. So the reason this has happened is because Dwayne and Jane have been so busy in the gym and with everything else that's been going on, to chase them up. Monthly subscription payment reconciliations are not getting done. Some members move on without paying any money that they still owe. With sales at their current level of 201,000, it means it's taking an average of 32 days for customers to pay, for debtors to pay, even though their terms of trade and invoices say 7-day payment terms. So immediately they need to put a plan in place to fix this problem and bring some much needed cash into the business. So what do? They meet with their accountant for a one-off cash improvement meeting, and they've identified clear actions to take. The new plan has a target to bring debtor days down by 10 to 22 days. So that means it'll be 22 days of sales that haven't been paid rather than 32. To do this, in their cash improvement meeting, they agreed that they'll check if each member is up to date when they sign into the gym. And also they'll start phoning and emailing members who haven't paid as well. They'll be monitoring the results as part of their monthly management reporting service. By doing this, debtors are expected to reduce to £12,000 within 2 months, which will free up over £5,000 right when Dwayne and Jane need it most. That will bring £5,000 additional cash into their business.
Thanks, Ian. Okay, so now that we've redefined success for Dwayne, Jane, and their business, we need to do the same for their team. So on a basic level, your team's needs are very similar to your own as business owners. They need security over what their hours are and some flexibility where possible to have a balance that supports a happy and healthy lifestyle. They also need security over their wages and clarity of when and how they can take holidays, as well as any other perks that you might offer. Your people are the greatest assets in your business. With the risk of burnout higher than ever and unique pressures on the job market causing a severe shortage in workers, it's never been more important to support your team to help them in their success in their roles and beyond their roles within the business too. This diagram is based on content from Vern Harnish. There are 4 decisions driving growth in every business: people, strategy, execution, and cash. We've looked at how Dwayne and Jane can execute a better strategy or plan. This is how they'll set the vision and focus for their team. One of the key decisions focuses directly on people because it's critical to attract and retain the right people. However, the team also contributes in the remaining key areas: execution and cash. Your team is critical. Their happiness and including the overall culture of your business is just as important as the strategy itself. Now let's have a look at the 4 disciplines of a healthy business. It starts with developing a cohesive leadership team. For Dwayne and Jane and all business owners, this equates to a leadership team that has been built on trust, mastered tactical conflict, achieved commitment, and embraced accountability. Next, you need to create true clarity for your team. There are 6 elements of clarity: why your business exists, also known as the core purpose. And if you remember back to the business plan, that was the first element of it at the top left-hand corner. It was the core purpose. How your business behaves, which can be defined by your core values. And these are the guiding principles for how we make decisions and how we treat each other and our customers. Again, that was also in the business plan. What your business does and how that relates to delivering your purpose. How your business will succeed, and that is recorded in your business plan. What's important right now are the 90-day actions you've identified in your plan. and who must do what is also recorded in the plan, as well as when it must be done. These elements of clarity not only help your team better understand the game plan, they provide cultural guidelines to uplift workplace culture and ensure that every team member is a team player and on board with executing the plan together. On the flip side of that, every time a team member is distracted or disrupted by confusion, or there's some sort of internal conflict, not only is that not constructive, but it also eats into the productivity and bottom line. Clarity over what success looks like for your business is the first step in creating great company culture. Your team want to see how their role and responsibilities are connected to your vision for the company and how they're helping to make an impact. Then we simply need to over-communicate the clarity and reinforce it, acting as chief repeating officers in our businesses. It's up to Dwayne and Jane to constantly reinforce why and how they're helping their customers become true badasses, which is what one of their core values were. We help our clients define these elements of clarity when creating a business plan. We've also got a culture card template that we can provide you if you ask for it in the feedback form, and that'll give you a starting point for creating some of this clarity.
Right, thanks, Ikra. Being a flexible employer. So now we've addressed the high-level things that, as business owners, we can do to set our team up for success in their roles. How can we support our people's individual success? So individuals thrive individually. So while the status quo may work well for many of our team members, we should recognize that everyone has a different ideal working environment. Where possible, offer different start or end times and remote working arrangements. Obviously, if you're working on site, you can't do that, but there are many businesses where they can do that. And throughout the pandemic, people have found that they've worked better in different environments. And some people do their best work early in the day or in the evenings. So there are actual benefits to your business of doing this. You could consider offering a shorter working week for the same pay. I think one of the smaller banks announced that this week they were doing that. And it's becoming more and more common, as all the research tells us that people who work fewer hours are less burnt out, more productive, and more loyal to their employers. Another example I've heard of is it's just like throwing a long weekend on you from time to time. In other words, saying to people, next weekend, let's have a long weekend off. But make sure you give everybody lots of notice, so you don't just tell them at Friday morning that we can go home. And this gives them a chance to maximize the time that they get. There is a massive shortage of workers right now, and we need to ensure we are employers of choice, because the cost of recruiting new team members far outweighs the investment in our people. You could encourage study or extended leave options. So that's a great way of demonstrating your commitment to your people and their passions outside work. We actually want our people to have a life outside of work. This ensures they're fresh, motivated, productive, and have had blue sky thinking opportunities, which could lead to valuable innovations in your business. So ask the question of your people to establish what matters to them and how you can help them work around the other things in their life for overall better happiness. So, measuring team member success. This is a fairly simple graphic, which basically looks on the left-hand side, how we're taught to measure success, at least how I was taught many years ago, that you measure how much money, how much is your salary, and what's your job title. And that leads to people getting either overpaid or a ridiculous title or a combination of both, and it misses out on so much. These days, and especially after COVID, where people have been reassessing everything, this is how we should measure success. Job title, well, it's important, but it's not that important. Salary is important, but it's more of, have I got enough rather than how much have I got? Free time, people want free time to do things. They've had time, maybe they've been on furlough, they've had time to follow hobbies, to look at other things. So the people now want free time. Liking what you do, go back 20, 30 years. If you liked what you did, you were very lucky, because a lot of people just had a job because they wanted the salary, they wanted the job title. And then physical and mental health take up a big part of it. Now, what's the point of being successful in old-fashioned terms if you're physically or mentally ill? There's really no point. So, sorry, we've covered off how to redefine success for you and for your business and for your team. Now let's talk about the resources we have available to help you ensure your sustainable success. So here's some suggestions. First of all, get your personal budget template. Now, I know some people will be totally on top of their numbers. It'll tell you exactly what's in the bank, how much they spent on TV last month, how much they spent on petrol, etc. But that's the minority, very small minority. Do a personal budget and see where you can perhaps make some savings. We've got our sustainable business success worksheet, which we can send out if you ask for it in the feedback form. Then finally, we've got a team member reflection questionnaire, which you can then use. Again, you'll get that if you ask for it in the feedback form. You can send it to your team, see how they feel about things and how they're doing.
Thanks, Ian. So for those of you who need more support, our recommended strategy is to work with us to complete a business plan. And we've been receiving great feedback about how helpful this process is for nailing your strategy and providing clarity for your team. So if you haven't yet done your business plan, now's the time to do it, as it will form a great foundation from which you can build your cash flow improvement strategy. A business planning session can be done in a 1 4-hour session, or we can do it over 2 2-hour sessions. You should also prepare a financial forecast to reflect the changes that your business is facing, and this turns your plan into reality and into numbers that you can monitor regularly to ensure that you're staying on track. So the cost for those 2 sessions is 1,500 plus VAT each. If you need a little bit of more help to improve your cash flow and profit, we can sit down with you for a one-off meeting to work through the growth equation that Ian shared earlier, as well as identifying strategies to improve your cash flow. And that meeting is £350 plus VAT. If you're all good at the planning stage, but not so good at keeping a track of your numbers, then I recommend that you sign up for our management reporting service. And this means that you'll regularly monitor your results and stay accountable to achieving your goals. You do need to be on zero to sign up for the monthly management reporting, and it's £100 plus VAT per month. If you're not sure on the best way forward, or you just want to talk to us about how we can work together, we recommend a complimentary meeting to discuss your goals, current problems and challenges, and we can agree the best way we can support you going forward. If you do want to take if you just want some information on these services, just tick the boxes on the feedback form. It's not a commitment. If you do tick the boxes on the feedback form, it just means you're interested in receiving more information. So please do tick the boxes if anything there that you're interested in receiving more information on. And as Ian mentioned, the free resources that we've got available to you, if you want any of those, again, just tick the boxes on the form and we'll get them sent out to you. So we know that the benefits that you'll get from the services will be far greater than the fees that are mentioned here. And most importantly, it's about helping you as quickly as possible and ensuring that we are working with you to achieve success, not only for you, but for your business and for your team as well. So I want to open up to any questions that you guys might have. I'll just check to see what questions we've got. If anybody's got any questions, please just use the Q&A box and we'll answer as many as we can. So it looks like we've got a couple so far. We've got one here. I love the idea of a revised plan, but I am flat out with work right now. How do I free up capacity to do this work?
Right. Do you want me to answer that, Ikra?
Yeah.
Yeah, I think this is a very common thing. I think we hear, and it's kind of, well, that's the point, isn't it? Really, you know, the fact that you're too busy to do the important stuff means that you need some help. We did a webinar a while back, reclaiming your time, and that was all about answering this question: if you're so busy, how do you find the time? I'm not going to go over it in detail, obviously, at the moment, but I would say that if you're familiar with Stephen Covey's, what we call the achiever matrix, basically the stuff that you need to do, the planning, research, is the not urgent, important stuff, something we call the quadrant of quality. What you have to do is look at all the other three quadrants and find out what stuff you can stop doing or get somebody else to do. And then that creates the time to do the stuff that's not urgent but important. For instance, if you're doing not important, urgent stuff, which might be dealing with junk emails, surfing the net, looking at Facebook and stuff like that, if you can stop doing those, that creates some time to do the important, not urgent stuff. And there's two other quadrants. I say I won't go through them all, but look at our webinar. It's on our website, Reclaiming Your Time, and that will really give you some ideas on how you can create the time to do the stuff that's the most important.
Thank you. Just check to see if we've got any more. Let's see. So we've got one here that says, I'm concerned I can't afford to do this work. What can you suggest?
Without being flippant, can you afford not to? I mean, what I mean by that is, this is the important stuff. This is the core activity of a business owner, what should be. Do you know are you making enough profit? If not, do you know why? Do you know what to do about it? Do you know how much do you know how much you spend each month? Do you know how much you could spend each month? All these things, if you don't know, it's like driving blind. You're not doing what I would say probably the most important thing in your business, is making sure that you know where you are financially and you're going to create success. Having said that, you have to look at what you're spending money on. Is there anything you could stop spending? Think back to the traffic lights. Is there anything you could stop spending money on that could create the cash to be able to afford to do the important stuff? It's a bit like, it's like a bit like saying, I'm too busy eating to lose weight, in a sense. You've really got to reassess your priorities and say, this stuff will help me make the money that I need to live off. It will help me, whether it's a revised success definition, as Dwayne and Jane had, or whether it's a really ambitious projections to achieve some of your dreams. The only way to do it is to spend the time and spend the money to actually do it, and then you will achieve it. We know this from our experience with clients. Very practical terms, obviously, if literally don't have the cash, then we're obviously open to be flexible and see if there's a way we can do this to help. That we're not going to make you go bust by to pay our fees. That would be slightly counterproductive. So yeah, there'll be ways and means. We can be flexible about these things.
Yeah, thank you, Ian. That looks like that's all the questions that we've got. So thank you for those, and thanks again for making the time to attend this webinar. We really do appreciate that your time is very valuable right now. So we hope we've given you plenty of ideas to think about and some clear actions for how we can support you. Before we go, I thought I'd share this quote with you. Nothing is so contagious as enthusiasm. Make a plan today, commit to at least 3 actions that you will take as a result of being here today. Write them down, give each of them a owner and a completion date. This is a worrying time for many businesses, but you're not alone and you don't need to worry. There is a ton of support out there and much more to come. So thank you once again for coming along and participating. Please don't forget to fill out the feedback form. Let us know what you thought of the webinar. And of course, if you do want any of the free resources, tick the boxes. And if you want any information about the additional support, please also tick those boxes. So thank you so much.
Thank you.